Options Center. It is 9 o'clock in the morning, Saturday, 10/16. Welcome, everybody. If you're new here, go down to that bottom right-hand corner, hit the Options Center logo, and subscribe. Also, like this video if this information helps. But I just want to give a shout out to our patrons. Thank you for the support. Even if you watch these free videos very often, please consider joining the Patreon. The first tier is $5 per month. It's not much, but it helps us to continue to do these videos often, and then you get a lot more information with the Patreon membership. So thank you, and if you're doing well on your own portfolio, that's another good reason to help us out here. Also, we have a free Discord that we are involved in each and every day. It's called The Options Guys. All this information is down in the description, so check those out. All right, this is going to be a little bit longer video, so buckle up and check out what we have to say. This is all about getting trade education and perhaps seeing where the market's going at this point. And so here we go. We're going to do SPX on multiple time frames. Check out all of this list here. I'm not going to read it all off, but then for the patrons, we're going to go in more depth with QQQ, IWM, and see if we can learn something off of WXY. Since we're dealing with that in the market, I want to show you on Roku something that shows the same thing. So, okay, here we are on the SPX weekly chart. After this huge megaphone move, which ended off wave 3 down to wave 4, we are looking at primary wave 5, intermediate wave 3, 4. Is 4 over? We don't think so, but we'll go into that. And then we're looking at the minor wave being a move to the upside, a WX move. And then on the minute, a Y. And we'll go down to the 65-minute chart all the way down there so you can see all of these levels that we're looking at. So on this weekly chart, what can we see? We are now back above all MAs. That's bullish, you guys. Why are we so bearish? Well, we think there might be some sort of trap in here, but we are over all the MAs. We came off of this rising pivot, broke to the upside, and now closed above all the MAs. On the MACD, we are still in a bearish momentum. That's one of the clues that gives us that we think we might have a little bit more downside. It's possible. It is definitely possible that we go and retest this. The yellow line is the leader line. The blue line is a MACD line. Test that, actually break through and make a divergence again with all-time highs up here. That would mean that our count is a little bit wrong. That would mean that our wave 3 is not quite over yet, and we'll have to recount that. On the RSI, another clue is we didn't quite come down to the to test that 50, and if you look at back, you see we test the 50, test the 50 line, test the 50 line. Coming from the highs, we test the 50 line first. There's so many times that we test. We didn't even come down, and this is supposed to be a major wave in this wave 4. And we didn't even test the 50 line yet. I'm not sure if that's a possibility. Again, unless we're wrong with this count being a 1, 2, 3, 4. This 4 could be a minor wave 4 if that were the case. And then we'd reach all-time highs, and then we'd have a intermediate wave 4 to come after that. Okay. Now, let's go down to the daily, get some more information on a lower time frame. Oh, and this is definitely this candle here, a very bullish. It's not a Maribozu, but we'll just call it a follow through candle there. Moving down to the daily, trend is our friend. we have this huge megaphone. You see this rising pivot. We'll keep track of that because I think we're going to test it one of these days here. So, looking at the white, these are intermediate wave, and on the daily, we'll call it the primary 1, 2, 3, 4, and then after this ending diagonal, which we believe started here, we have a 3-wave move up, 3 down, 3 up, 3 down, 3 up, and we broke down from that ending diagonal. Now, another tea leaf that says, hey, well, we didn't even test. We broke down from the diagonal, but we didn't even test the beginning of it. And even if you think the diagonal started from this point right here, I drew an alternate diagonal line at this point. So didn't test it. It's not an exact rule, but it is a measured move. And so that would test our 200-day moving average. So we, lots of places to come down here if our count is correct. And we didn't even reach a 23.6 retracement at this point. So now looking at the first move as an A, B, C. So this is a possible W. Moving on to X, so we have a W, X, Y. So 3-wave move down, 3-wave move up. Is this wave over yet? That's what we're going to determine here today. We're gonna show you why we think that it is imminent that we reverse from this point. And then we move down to Y. Will it get down to that point? Maybe not, but we do have another leg down that we're looking for. So WXY. Now, if you look at this in a little bit more bearish perception, then this could be a 1. And I would actually consider this the wave 1 here, expanding flat, which would mean you have a 3-wave up, 3-wave move down to make just a little bit lower low, and then a 5-wave move up, which means this probably wouldn't be over yet. You'd probably have a pullback for a 4, and then a 5 last stretch up there, and that would be wave 2, and then a wave 3 down, much lower, 4 or 5. And that would be that would probably mean that we have a top in the market. So I don't want to leave that out. Just want to show a more bearish perspective. Now, seeing that the weekly time frame is down and we are curling up on the MACD. So hey, maybe we have a little bit more upside to go, and it's actually a wave 2 up there. So now, for the bulls, is this over? We had our ABC, and this is all over. Well, if you're a bull, maybe your extension is from the bottom of wave 1. That would be wave 2, and to wave 3, which it did pull back to the 618. So that was a nice 1-2. And then your target would be about, it's in blue, but it's 40, about the 45.75 area. So that'd be all-time highs for your wave 3 to push to. And right there, 45.75. Yeah. And so that should be your pretty near-term target that we should push up to fairly quickly, because this is an impulsive wave in that case. So for the bulls, that's what you're looking for. I'm not in that camp, but even if this does extend out there, maybe this is an expanding flat in the sense that we come down for the first 3-wave down, 3-wave up to expand into all-time highs, and then a 5-wave move down into maybe the 23.6 area. And that's our finish. So you see how Elliott waves can create structure, but we don't know exactly what's happening when you have these complex corrections like this, because our alternate from the wave 1 to 2, right here in white, that's a perfect zigzag. That's just easy, done, easy peasy. You count it, and then you start getting bullish with your next move. So that's very easy when you have this complex corrections. Man, it's all over the place, and we'll talk about the WXY later in the Patreon video, exactly what you're looking for with those and the reason why they're so complicated. So let me go down to the MACD. So the MACD made a bullish cross. We're still in bearish territory. We're looking probably to test this zero line here. So that could mean maybe we make a doji, one more push up, make some sort of reversal looking candle. But this is called abandoned baby, and we'll see that on the SPY. On the SPX, it looks a little bit different. So we'll check that out. We did break through the 50 area, and we're getting towards the 60. The 60, when you're in bearish momentum on the weekly, we're going to consider this the bear market on the daily, and the 65. You usually don't make it much further than the 60 range. Top of it maybe 70. And it, it's, so we're looking for a ceiling somewhere around here in the 60 range at this point. That's virtually what I'm saying. And before we make another move down. Now, after making this move up in the MACD and assuming we do get lower lows at this point, then I do suspect that we would make a higher low in the MACD, creating a bullish divergence. And so that would be what we're looking for in there. Not just a one and done and then all-time highs. Let's go over to the 65-minute chart, see what we can see down in the real nitty-gritty here. Let's back this up just a little bit and a little closer. That should do it. Okay, so after breaking down from this ending diagonal, we had a possible 5-wave move down. Some could say this is a 3-wave move down. It doesn't really matter. The reason why we named it ABC is because it looks like we have 5, 3, 5 for a diagonal, then a 3 corrective wave move up for that would be a W, and then a 3-wave move up for an X, and then we'd have the Y move down for possibly another double, possibly for another zigzag. So that would be your zigzag combination, which would be valid for an alternate from the regular, from that regular zigzag that we had there. So again, this is a 3-wave move down, or 3. So A, B, C for your W. WXY for your X, and then maybe a WXY or an ABC down to for the Y. Now, looking at this, why do we think that we're getting into this point where we could reverse? Okay, so you see this, we put this trend line here. This is our supply area from the breakdown from this ending diagonal. That's a perfect spot for resistance. We had resistance here, couple points in between, and then a real difficult time getting back up. Tested 3 major times there for that ending diagonal, and now we're getting ready to test that again. We're kind of in that area already. I didn't draw it. This is more of a zone than it is a defined line like that, and that's pretty typical. More upside, we start to break this area here, and then we would consider that we have something else going on, and we might hit all-time highs at that point, and maybe that expanding flat of what we're looking for. So after this resistance, I do think we're going to test all-time highs. Am I actually bullish? I still think the structure of this is corrective, so I'm not looking for a possible. If you're, this could be a 1, 2, 1, 2, 3, 4, 5, but getting your moves in here, you see a 5-wave move up here, 3-wave move here, and this is, if you have a 1, 2, it's possible. This looks like a 3-wave. If this is a 5-wave move here, I mean, yeah, it's valid. Getting a pullback up here, you would not want to retrace a wave 4 underneath this wave 2. So you get this wave 1, and this is the start of wave 2. You don't want to cross back into wave 1 if you get a wave 4 here, unless you're doing a 1, 2, 1, 2, 1, 2, and you're really looking bullish there. So this looks like a 5-wave move here as well, which would mean if that's a 5, it could be a zigzag as well. So just all sorts of things happening, but I'm still with that bearish momentum. We're getting a little overbought in this scenario here, and if we are going to pull back for a wave 4, then we'd probably see a crossover and a pullback on the RSI, and then a move up to create bearish divergence with a lower high on the MACD and a lower high on the RSI. So all things that we will take a look at. And at this point, if we start to break back down underneath this gap and cross over here, I do think that we will have our continuation to the downside. So you see there's definitely bullish takes on this. There's extreme bearish takes, and this is all about the confusion. This is what makes a market, you guys. That's why you have a lot of bulls in here and a lot of bears in here, just trying to hash out what's really happening. Okay, so let's move over to the SPY. Since we're talking about abandoned babies, what are we talking about when we say that? You know, that's it's a candle formation that we thought we might have had right here with a reversal candle. We did not. We opened up actually within that range and pulled back. So now that we have our move up in a pretty extreme move at that, where we have I can put these daily gaps in here just as a reminder, but we gapped up and got held up into the supply area, so we could gap up again and continue this move much more to test all-time highs. But what would make this an abandoned baby? You see this guy right here, after an exhaustion gap up. If we get back down underneath this 50 MA, you see we're over all the MAs. We get back down underneath there, then the bears are back in control. Bulls are in control right now. That's the fact on the daily chart here. Momentum's up, RSI strength is going up. If we get back down underneath here, under the 50, then we're probably looking for new lows at that point. So that's kind of a breaking point for what happens on Monday. If nothing really happens and we move within this candle range, we have an inside day, then the same thing still happens. Then you're looking at an island cluster. Okay, and the same possibility happens. We gap up, and then now you're talking probably testing all-time highs. Okay, so put those gaps in there as a reminder. And now, looking at the volume, not a big volume, and just about the same here, if not tapering off just a little bit for a push up. It's natural that on bullish moves that you don't have huge volume. We did have those nice spikes down for the bearish candles. There's usually more volume in that just in general, but not very impressive for this first move down for reversal. And not any like follow through. So we're looking for maybe a little bit more volume going into it, but so we don't have volume supporting. That's what I'm trying to say. We don't have volume supporting this move to the upside. Let's go over to the VIX futures. Looking at the VIX futures, you see this huge wedge broke back down into the wedge. We will adjust this wedge if we make new lows. We have not made new lows yet. We had a 3-wave move down, pretty harsh move to break down the VIX. Now, remember, the VIX controls how expensive options are. So if you're an options person, then your options are really cheap on the put side, well, and the call side, but puts, if you're looking to protect your positions and you are bullish, this is a good time to actually put them on. We have a touch here, and now a touch here. So you have a support and a rising pivot, we'll call this, that we're in confluence. So you get underneath here next week, that's going to be a big tell that we're probably going to hit new lows in the VIX, and that we're going we're going higher to all-time highs in the market. So look for this to either bounce or break down, possibly even overnight for the Sunday night into Monday. All right. And I think that let's look at the SPX one more time for the options expected move, and then we'll end this for the free video. Expected move for the week is 61 points to the upside. This is where we ended the week, where we're going to begin the new week. We are either moving 61 points to the upside or to the downside. Last week it was bigger. I believe it was 90 points or so. We did dip down first, didn't quite touch the bottom, but we certainly moved back to the top of the expected move there. And that's pretty typical. We're looking to for probabilities stay within this playing field. We call it a playing field. If you're not familiar, you can look up the free video that I had for options expected move. And but we do look to touch either side of it. It's non-biased. Obviously, we were bearish in this market, but we ended up touching the upside of the options expected move. So had we thought about this, we actually did it the week before, but we did not think about putting butterflies on. That would be a wonderful hedge. As we were looking for lower lows here, you put on some butterflies that wrap around the options expected move to the upside. And that's a little bit more advanced for options people, but that would have probably saved us a little bit bigger hedge on our move, and probably actually made money on this big move to the upside. We participated in a little bit of it, and then didn't believe in this move, so we didn't actually use this as a money maker. We just hedged against it, against our losses there. So all right, that's all we have for the free portion of the video. You guys, thanks for joining us here at Options Tender. We will talk to you soon. Patrons, stick around.